Hello and welcome to Fund to Money. Here we're going to address some queries related to tax which our YouTube viewers have been sending, and the answer should be useful to all other viewers and followers of Fund to Money. So we'll be covering them in just a little while. Welcome back. Welcome to Fund to Money. We're discussing some income tax queries which our YouTube viewers have sent to us, and their answers should be useful to all our viewers and followers and listeners at our channel at SoundCloud and our website www.fundtomoney.com. So we'll take up the queries. Before we get started, it's important to point out that please follow our playlist. There are lots and lots of videos related to YouTube queries by our viewers, and where we have answered many questions, and they are very popular videos. You could go through them. You can go through the podcast, and also you can go down to the description section and see the text of the answers that are being given, and of course check out some of the other playlists which are not related to tax. You'll find them useful. A lot of them have interface with other areas such as loans, insurance, etc. So let's get started with the questions. I'm going to read them out from a piece of paper. So here it goes. So the first query is by Udserv. Now Udserv says that, will STCG tax be applicable if you redeem mutual fund at loss besides paying exit loan? So basically, person has made a loss. Will STCG tax be payable? Since you are not making any capital gains, therefore the question of paying tax doesn't arise. So that's good for you. The other good part, redeeming part, shall we say, about this loss is that you can carry forward this loss while filing your income tax return, and this short-term loss will get offset with short-term gains and long-term gains in the future. So you can do that. So this pain will not go in vain. So this is how it will pan out. You will not have to pay tax, right? Hope that satisfies you. Now, next question is by Bima Saseni. So we hope we are getting all the names right. If I park money for less than 3 years in liquid fund, can I show the gains in other source? So if the question is somebody's investing in a liquid fund for less than 3 years and makes gains, can it be shown in other source? Well, the important thing to realize is that when you short-term gains actually get added to your income, right? Your income tax, your regular income, and then it gets taxed according to relevant income tax rate, right? So if it's less than 3 years, then it's a short-term. You're making short-term capital gains, and this is what the treatment is going to be. Now it's going to be dramatically different if once you cross the 3-year threshold. So basically, what's going to happen is you're going to get capital indexation benefit, inflation indexation benefit, shall I put it that way, and your capital gains get reduced, and because the cost at which you're acquiring those units, they get enhanced by the rate at which the inflation has gone up. So basically, what's happening is your capital gains for taxable purposes are getting lessened, and you also get a concessional capital gains tax rate, long-term capital gains tax rate of 20%. So all in all, you benefit from that. This is the big picture. Now you can figure out how your question gets placed, the answer gets placed according to it, right? We hope we have been able to explain it. Now, Kapil Dhingra has come up with a question, and now the question is the lock-in applicable on first day of investment or 3 years after the latest investment? So now this is a very common question that keeps coming to us. Now the important thing is, whenever you invest, if suppose it's an SIP, you're investing regularly, or you invest in a lump sum, each investment will have a lock-in of 3 years. Now we are obviously talking about ELSS here. That is the investment which has got a 3-year lock-in, so where you cannot touch the money. So that is locked in for 3 years, and then you can touch that investment. And of course, the first year when you invest, you get Section 80C benefit. That's how it comes into the tax domain. It's because ELSS, Equity Linked Savings Scheme, is a tax saving mutual fund, and it's part of the Section 80C entitlement of 1.5 lakhs annually tax deduction that you get. So that's the backdrop, right? Now there's another question like Kapil Dhingra, which is saying, what is the procedure to take out money from long-term capital gains account in between? So the background is this, that suppose you sell a real estate asset, it could be home or something like that, and you get the money. Now if you want to save tax, now one option is, of course, you put in Section 54 EC bonds, so that's a separate discussion altogether. But if you want to save tax, one route is if you're going to reinvest it in either a ready to move in home or some construction is happening. Now remember, for ready to move in home, it has to happen within 6 months. If you're constructing it, then you're allowed 3 years. If you don't manage to do it after 3 years, then it gets taxed, right? Now, to where will you park the money? You typically park the money in a long-term capital gains account in a bank, and you can only withdraw the money if you can furnish evidence that it's being used to buy either a ready-to-move-in home, or that money will be used for a construction of a home. So these are the only two ways by which you can withdraw money. You have to furnish that evidence. So that is the key part. So hope you've found these answers satisfying, and please continue to write into us. We'll be very happy to answer these questions. Keep following our playlist, keep reading the description section of each one of our videos, and I'm sure you will benefit from them. So till the next time, take very good care of yourself, and goodbye.